on to Dr. Rothschild. He is one of the world's most important thinkers on the subject of prediction markets. And he also happens to be on the board of scientific advisors for Cassandra. And overall, he's also a great human. Personally, he wrote one of my recommendation letters for my green card. So he made a huge difference in my life personally. But also, I think out of most people that are as involved with prediction markets, he's the one that is most aligned with Cassandra's mission in terms of using prediction markets as a tool for collective intelligence, as opposed to merely a tool for financial speculation. Without any further ado, Dr. Rothschild, you have the floor.
Welcome, and thank you for having me. Lorenzo told me I can talk about whatever I want, so we'll see where the conversation goes. I see a few people online, and this also being recorded, so obviously feel free to ask questions, and happy to take them along the way and help that drive the direction. As background, I am at Microsoft Research in New York City. My PhD is in economics at the University of Pennsylvania. Specifically, the work that I did for my PhD was studying basically market design involving prediction markets, futures markets, and options contracts. My main work coming out of my PhD was heavily focused on when and how publicly available prediction markets work, but also a lot of work in trying to build various different types of markets. So working on different scoring rules or different automated market makers in both direct markets and hybrid types of polling and forecasting, as well as much more complicated things involving conditional markets, different ranges, different types of ways in which we were also exploring injecting various outside data in it. Happy to answer any sort of questions about that, although admittedly, in the last few years, I've done less and less work in actual market design for prediction markets as my work has evolved into other places, which I'll talk about briefly. But I did want to start out by just talking about the current kind of public craze about prediction markets and my very high level thoughts on it. And so let's see if I can share. I did prepare a few slides here, and let's see.
You should be able to share your, you should be able to share your screen.
And so obviously it's quite something for somebody who regularly follows prediction markets and has worked in prediction markets for years to see this kind of general interest and whatnot that is happening right now. But I speak for a lot of people who come not from the business side of it or from the journalist side, but more from the research side, that it's a bit conflicting to see what's going on. As many of you may know or not know, the two main prediction markets that are getting a lot of attention these days are Kalshi and Polymarket. And Kalshi is US-based exchange. It went through Y Combinator, started by a couple of MBA types. I would say from my basic conversations with them throughout the years, especially as they were getting started, no particular knowledge or interest in prediction markets per se. They saw this as a potential business opportunity because they saw that there was a lot of possibility there. But of course, there was a bunch of legal barriers. And their method was to take something which I would say was well known and well accepted and try to be the first ones to get legal acceptance. And they spent a lot of money and a lot of fundraising paid off for them when they did get that legal acceptance. Not surprisingly, or depending on how you think about it, concerningly, it was tied to them bringing on Don Jr. as an advisor to the company, a paid advisor. I'm sure Don Jr. is dropping some real deep knowledge on how to design the UX for prediction markets, how to think about liquidity, and all sorts of meaningful questions regarding drawing up contracts. But all kidding aside, they're basically paying him cash and then they're getting legal agreements. It's a sweet deal, but one that was quite concerning. I'm not going to accuse any malfeasance, but obviously the correlation is quite interesting, especially when you think about Polymarket, which is the other major exchange. This one was built out of what are quite interesting folks who had also had a lot of interaction with, think that they are dynamic and forward-thinking in how they were thinking about fintech and thinking about prediction markets in general, but they're coming from the Ethereum side. So this is a crypto situation. They were made illegal. They ran into a bunch of legal troubles. And then they too brought in Don Jr. and things miraculously have seemed to clear up for them. So in both cases, you have people who on one side, just business folks who I don't think have a great depth or interest in the scientific backing of prediction markets. And to Lorenzo's point, the information coming out of prediction markets, they sell that as a meaningful point, but I don't think that's what keeps them up at night. What they're there is just to make money, and this is an open business venture. And then the other side, you have people who are actually quite engaged and zealot on the crypto side, saw fintech extensions and the potential for markets as a certainly meaningful extension on the crypto side. And I don't blame them at all there. They're innovative folks, but they also bought John Jr. in. Both sides, you would say, are dominated by your right-wing tech bros at this point. So let's say that kind of all comes together with the Don Jr. thing. But more important, ultimately, both Kalshi and Polymarket are following the money. And the money has always been in sports. And basically, the reason the money is in sports is it's pretty straightforward. It's that sports have outcomes every day and people like to watch it and like to bet on it. Other things in which we may be interested in gaining more insight into are less regular and more complicated, have a more niche audience. And ultimately, the problem that you have when it comes to the sports situation is just that there is no informational value in prediction markets in sports. So there is the potential hedging value of information, of having these markets in sports. The bars in a certain area, and they want to hedge whether or not their team is going to make the World Series or the Super Bowl. There's meaning there in theory as a commodity, but I can make a statistical model for football, baseball, basketball, hockey, etc., based off of the updated feeds that is almost definitely in all instances going to be better than what the market can provide. There's no informational value because sports are ultimately one with very concentrated and clear data and very organized and regular outcomes. So the value in prediction markets come a lot more where you have in any sort of crowdsourcing, come more with some of the crowds, come more where you have idiosyncratic information and you have dispersed information and outcomes, right? That's where you want people to come in with independent information, independent kind of understanding of how the information will come together. That's not the case in baseball, where we have tens of thousands of incidences and you can build an amazing model. And so the movement in sports also has a kind of secondary concern, which is that to say that I have spent my career thinking about markets. I'm all about markets. I love markets. I'm very laissez-faire on what people do that doesn't hurt their people, but that we can all say that the proliferation of sports gambling is already there. The marginal benefit of having two more players there is pretty low, but more important, is a bit concerning about how much it's influenced sports and the obvious scandals that are going to come down the line, including the recent point shaving questions in college basketball. And that brings me to a second point I want to make. Third point. So one, I'm a little concerned about who these people are. Number two, I'm concerned that's ultimately going to move into sports and move away from high information value prediction markets into just another sports gambling place. But number three, they're leaving themselves open to manipulation. So sports in general are generally the way they're generally gambled on the pros is not a huge manipulation concern because of a very simple thing. And I'm going to hearken to my advisor, Justin Wolfer's really great paper on point shaving, in which basically, and I can't see anyone, hopefully people know or don't know about point shaving, it doesn't matter, I'll explain in a second. But the idea basically is that a market is open to manipulation if the rewards for cheating far outstrip the risks for cheating. So let's think about this. Even though there's tens of millions or hundreds of millions or even whatever on gambling on the Super Bowl, actually throwing the Super Bowl, the risks of being caught would be extremely high and the detriment to the players in throwing the Super Bowl would be extremely high. So players are not going to throw the Super Bowl for their wagering. It's just really unlikely. But if two Division III basketball teams are playing and the game is being gambled on with millions of dollars and it's not about the outcome, but it's about whether or not one team wins by 10 points or 11 points, is extremely low risk and low cost to miss that free throw at the end and win just by 10 points rather than winning by 11 points. The potential rewards compared to how much these people are being paid, which is basically nothing, to the potential risks, that is when you open stuff up. So it happens in sports, but it even happens even more in the types of things that these prediction markets are creating. So here's an example, and this is somebody who's a huge prediction market fan. They're saying how funny it is that there is this market of whether or not a White House press briefing was going to run 65 minutes, and then she abruptly pulls the plug at 64 minutes and 28 seconds. Okay. Do that. This lady, Caroline Levitt, was gambling on Polymarket or Kalshi or whatever it is. I can't see my screen very clearly here. Probably not. But when you open up this possibility, when you basically create contracts that are easily manipulatable, you open up these questions about the markets that cause concern. And these things have a lot of questions already about trust and manipulation. And obviously the situation in Venezuela made a public news. There was this question about whether or not the market in Venezuela for the Venezuelan outcome was being traded on prior to the attack. So insider trading is encouraged prior to the attack on kidnapping the president. These are things that are already
let's not
concern.
forget the controversy over that contract. It's also over the definition of an invasion, which is still being disputed on Polymarket. Okay. Yeah.
Yeah. So one was this question about insider trading and potential for manipulation questions. And then you have this question attached to it. Exactly. And in this case, writing the contract over was it an invasion or not, as Lorenzo's saying in Venezuela, that's super hard, right? It's a super edge case. And the Supreme Court is also another example where it is a super edge case. The Supreme Court rulings are very often complicated. And in this case, basically, the assumption here is that John Roberts wants to save Donald Trump from himself. So he's probably going to rule against the tariffs because basically, if you eliminate the tariffs, the stock market will go up. We won't invade Greenland. There's all sorts of really positive things that will help Donald Trump that he doesn't understand. But it's also ruling against the tariff, ruling against tariffs. This is not a very clean cut thing. John Roberts is going to write a ruling that most likely write a ruling that tries to split Solomon's baby. And there is a detailed contract that they've written up here. And it's really important. These types of questions are important. These types of questions actually make a huge difference in how people may invest money. Right now, there is a huge market in the essentially buybacks for tariffs or tariff paybacks. So if John Roberts he may make all the tariffs moving forward illegal. He may make that retroactively, and then the U.S. government will have to repay people. And there's already these bond markets for the repayment of tariffs paid. It is really subtle. It is really important. And this goes back to my first 4 points. I don't quite trust these guys. They write badly manipulatable contracts. They have a lot of questions about whether or not they're really in it for the information. There is this insider question already happening. And then add on top of it, even if they did everything right, this is hard to do. And so are the people who are not doing everything right, are they going to do that? And that's a question. So if there ends up being a controversy over the Supreme Court ruling, that wouldn't be very surprising to me. It wouldn't even be surprising to me if you had great people doing it. But so this is the concern when you have less than great people doing it. But okay, so now I've hit on a few different things. I'm up to 5 things. Let's decide another thing, right? As I said, these guys are all tech bros. They're super right wing. They're in with the Musk, Trump, MAGA situation. And this was one of my favorite contracts, Kalshi contract. And it's for how much government spending will Trump cut in 2025. And what you'll notice is that they didn't create a whole mutually exclusive set of contracts, which is by itself is a very bad thing to do, right? So basically, the answer had to lie somewhere between cutting the government to zero, so whatever, cutting at least $12 trillion, or raising spending infinitely. It simply maybe didn't occur to them that the answer would be less than zero cut, that the spending would go up. And so now you can say, okay, so that's just free money on the table. If there's good traders on the other side, sure. But the structure of the exchange the types of questions they do and the types of contracts they provide, that inserts their core biases, right? And so it affects traders, the fact that they didn't even offer that, right? So first of all, from an information perspective, to me and most people who understand how government works, understand what Doge was trying to do, the fact that the government would spend more money in 2025 was an obvious answer, but it wasn't a choice. So now you could say all of these other no's, they all went to zero, these other things about cutting, but ultimately it makes a difference, the fact that there was no contract out there that was government would raise spending. This induces a bias and is a concern. So the general question then comes down to is, how much can I trust this? So when they do information contracts, ones that we think are quite valuable to know, should I believe this with the bias and competence and other concerns that I've laid out, and the fact that the traders are generally pulled in from these kind of right-wing conversations like Kalshi and Polymarket both have these really hardcore pro-Trump, irreverent pro-Musk conversations going on X. Polymarket's one of the big players on X, just literally one of the biggest accounts on X. I have my burner account on X. I open it up and Polymarket's up there just talking right-wing smack against people. This will make a difference. Is Gavin Newsom the forerunner, the most likely Democratic nominee? Probably. Does AOC have a 10% chance? I don't know, maybe. Does Kamala Harris have a 6% chance? Basically, no. I don't know. These are open questions. The question is, I want to be able to look at the market and just trust the pricing. But there's a lot of stuff going on that if this was in trade or if this was predicted, I would feel very different about. And it goes to this question of, obviously, we assume that the marginal trader can always walk in and make something happen if they think these are in balance. But ultimately, if there's two markets out there and they're in general agreement, it's hard. And there's bias. There's all sorts of reasons why the marginal trader wouldn't actually pull all of that into alignment. I'll just conclude the kind of starting section here today by saying that some people are still pulling these data. So here's Paul Krugman's article from yesterday, where he utilizes the Kalshi numbers to showcase the fact that Kevin Hassett's stock has fallen and Kevin's stock has increased as the next possible Fed chair. Certainly useful, certainly information. But with all this talk of the Polymarket and Kalshi being hot, all this money flowing through billions of dollars, I don't think that you're seeing the markets make a huge impact on the typical elite, let alone the general population, because I don't know how much people trust them or how much they're niche into this right-wing ecosphere. And so these are things I'll be following. I want prediction markets to succeed, but I also am worried that some of these systems are going to lead to just a massive scandal or a massive problem. So I have other topics I want to jump into, but I'll conclude this one section by saying Josh Clinton has a paper out, which I actually have a lot of issues with as a paper. This is the first attempt I've seen to look at these new prediction markets and ask, are they doing a really good job? And basically he looks at it and says, yeah, they're actually even just directionally not that good compared to what you'd expect, especially because a lot of these outcomes are foregone conclusions. They have a little selection issues and other problems with this paper, but it's open research to look at these markets and prove whether or not they're actually well calibrated or not. And also that's conditional on the types of questions that they're pursuing. See just a few people in there. Any questions?
Yeah, David, I want to thank you for getting the conversation started here. I hope everybody at Cassandra and outside of Cassandra now understands that, yeah, we're willing to engage with the biggest criticisms of prediction markets precisely because we want to make them better. David, you made a great case as to why we definitely need a non-profit prediction market out there to build itself institutionally so that prediction markets are not dominated by for-profit businesses. And it's exactly what we're trying to do at Cassandra. Definitely going to engage with that. I want to ask
this paper makes the case, just to mention, that Predicted was much more accurate. Predicted is a nonprofit based off of New Zealand University and Aristotle. And yeah, definitely agree. But here, go ahead. Yeah.
So I want to ask you a challenging question first, because I do think we do have to address this issue. One thing on the sports question, this certainly makes prediction markets way better than the alternative gambling platforms, are that they are regulated as a financial instrument. And we can debate the details of that, but compared to a completely offshore or under the table booking system. But most importantly, the big thing that prediction markets are illustrating right now is that with the DraftKings and FanDuel, all the sports gambling companies, they actively block players who make money from the platform. And one of the things that prediction markets do differently in the context of sports betting is that it's a peer-to-peer system versus betting against the house. And sports betting can still be problematic, but I do want to point out, and what you think about this is that certainly what's worse than prediction markets doing sports betting is DraftKings and FanDuel dominating sports betting, because their structure is that they actively block players who make money from participating because they mess with the bottom line of the house.
Yeah. So there's a couple of things going on there. So number one is peer-to-peer is always more reasonable than the house, because obviously, as those who are into this type of question, the house is taking a vig on top of everything. They don't want to lose money. And so essentially speaking, just the odds are worse all the time. And in this case, Lorenzo's exactly right. There's a problem in the FanDuel DraftKings problem. They had a problem with people just really cleaning up. And so a very small amount of people making all the money. And this was seen as a problem. And so they've tried to block those people. And this is rules the casino has, where if you're too successful, they try to block you if you're not breaking the rules. And so this is it's just a horribly losing proposition. This also ties into, as I said, I'm really laissez-faire and pretty much on everything, but I'm starting to get queasy when you see these reports coming out of just the easy access to sports gambling has just made a lot of people lose a lot of money who don't have that kind of money. And at some point, it's getting a little bit concerning. Obviously, if the alternative is people to go to what's even worse, the bookie down the corner who's going to break their legs, maybe that's even worse. But at this point, just the easy access has led to just a lot of people over consuming in a certain way. Now,
to double click on that one sec, David, one of the disputes, and I would love to get your take on this. One of the big disputes right now that's being, because the prediction markets are being sued in court by several states, is the fact that as a federally licensed financial instrument, a prediction market can enter states, California and Texas, who ban sports betting, but fantasy DraftKings and FanDuel can't. Now they're doing it because they got DCM approval. But that's another element of this, is that the current regulation, at least the way until it gets resolved in the courts, enables prediction markets to bring sports betting in states that are trying to actively ban it in a way that DraftKings
and they were making an argument with this, that there was an informational value to this. And so this is also where I told both markets and have said so publicly, I cannot argue that there's an informational value to prediction markets in sports. As I said, there's a hedging value. So creating commodities could be useful there, but I don't think there's an informational value. And I'm very torn here, because I generally want to just let things happen and let people enjoy their vices, whether or not it's gambling or drinking or whatever. That's really generally up to their problem, as long as they're not harming other people. But in this case, it is quite tricky, and you're right. And this is an argument they're making, though, in the courts, is the informational value. And so I want to argue against that. The other thing it's key to bring up. So number one is just on this prediction market versus bookie type of situation. Betfair has been in this game a long time and continues to plod along. Betfair, probably 15 years ago or so, opened up a pretty robust bookie market on top of their peer-to-peer market. And it's pretty fascinating and fun to watch, because they'll literally have the exact same outcomes. And you can go to the peer-to-peer, which is confusing because they work on log odds. And so most people's minds don't work that way. And basically, you can make a wager that is simply going to be 10% more advantageous than you're going to get in the bookie. It's literally the same website. It's just in the exact same location, but they're taking advantage of the fact that a peer-to-peer exchange can be confusing for people. And so this easier bookie system, and if you translate it all, you're essentially, I'm taking the Bills to win the game at 55% or 65%. And the difference is just massive on my payout over time if I take the 55% on the peer-to-peer versus the 65% on the VIG in the bookie side, but people do that. The second thing I want to emphasize, and again, I'm a big fan of prediction markets, but this is also the one thing that really freaks me out about sports in the long run. Betfair has had many instances in the past, and again, I haven't dove into this too much recently, where people were taking advantage on the sports betting, because again, this is peer-to-peer due to time lags. And basically speaking, if you are sitting in a tennis match and you're physically there and you have your phone out, you have a time lag against anyone who is wagering anywhere else in the world, because it takes time for the TV to transmit what's going on. And so there have been many incidences and concerns over wagering live at sporting events. And so you have to take into account that if you are a normal person, you are almost definitely in a disadvantaged position if you are doing time sensitive trading over sports. And this is not that much different than front running on in stocks. That also happens, obviously, where people are moving their lightning fast cables as close as possible to take advantage of things, but this is concerning as well. So there's a lot of reasons to be concerned about the value of prediction markets in sports versus in more informational settings.
Let's take it one step deeper, because the founders of Kalshi come from a quantitative trading background. So they're very familiar with high frequency trading, right? I want to understand Kalshi right now is the target of a class action lawsuit because basically, if I understand the claim correctly, they're being sued because they say what we just talked about, that Kalshi is peer-to-peer. You're not betting against the house. However, a lot of users appear to not be aware of or understand that Kalshi is also a market maker, and there are other market makers on the platform. I want to get your take on, the ethics, but also the informational effect of having institutional market makers participating in a prediction market context against the public.
Yeah, it's a good question. Number one, you need market makers, and you should probably have algorithmic market makers to make a peer-to-peer market run well. Because basically, if you want to have a lot of markets up there, they're answering immediate questions. You need to have someone who is setting the price, and you'd want to have people who are setting the price in dynamic way as well. That being said, from my experiences working with other exchanges as an advisor, that they have shied away from building their own market makers for this concern. So I can't speak to the Kalshi experience right now, and I don't know exactly what they're doing, but I do know that other exchanges have thought heavily about whether or not they should build their own algorithmic trader that is essentially acting as a market maker, and decided not to do so because of the ethical concerns and because how that could be interpreted by regulators and by other traders. Basically speaking, there are a lot of related contracts, and this is true both in finance and in prediction markets, depending on they're structured. And one of the things that we've studied in the past is that building arbitrage traders basically is also actually not that difficult, but there's a lot of transaction costs of doing so. So if the prediction markets themselves were closing out arbitrage gaps around the exchanges, it'd be a really easy thing to do. There's also just known biases, or people are more likely to buy yeses than nos. And so some things become unbalanced in multi-contract marketplaces and whatnot. And again, for all sorts of reasons, it's better if institutional investors or some other person was doing this rather than exchange themselves. But I generally applaud having that action. I would also say, just to extrapolate further, one of the things which, these are all good questions, Renzo, so I'm not going to have time to go into other things I planned just in case we ran out of time. But I do think moving forward, there's a lot of really good questions as we move into a more agent-based world. How are we going to start thinking about forecasting? Where does polling fit in? Where do prediction markets fit in? Where does essentially this start going? And one of the things I'm pretty convinced of is, in my mind, a year ago, I would have been talking to you about building algorithmic traders that are, say, consuming news in near real time and feeds, consuming sports, whatever, that you could do very well. My guess is that they could do quite well in the markets at this point. But then a lot of this starts begging the questions of why markets. Our market structure is going to be necessary in a world in which maybe I build 20 agents or 1,000 agents that are consuming different types of news, and that I am aggregating those predictions in some sort of dynamic way. There's a lot of different things that could be coming down the line when it comes to forecasts, especially, as I said, one of the big constraints of markets is essentially people want to trade in the things that have the least informational value. People want to trade on who's going to win the Bills game this afternoon, but I don't value that. What I need to know is much more intricate questions about conditional impacts of the US threatening tariffs on the EU on the stock market next week, or on GDP growth in 3 quarters, that are just too computationally heavy for most humans to do anyways, and also costly, and it's complicated to build both the UX and the underlying system for. And so it's going to beg a lot of questions that if there's market intelligence that I want in the future, where do prediction markets fit in? Or is it kind of the lessons that we've learned are actually going to help us think about how agents engage with each other and with some sort of human oversight? There's a lot of different open questions for that as we move forward. But I do think the kind of standard prediction market as an information tool ultimately has been one that has shown so much promise, but has been so complicated to land. And for 20, 30 years from Robin Hanson's work in the 90s onward, you've been showing companies the ability to utilize these markets to make very accurate market intelligence, but we've been having trouble getting them to actually execute on them for just various human costs. But we've learned a lot from them. And a lot of the work that we learned from prediction markets help set up things like the Good Judgment Project and other avenues of utilizing smaller sets of humans to engage in versions of markets or versions of polling where it's just aggregated in. And the lessons from prediction markets are extremely valuable in that way, the lessons of markets in general. But I do think from an informational setting and simply from the human limitations and then the obvious benefits of LLMs, we may be moving in different directions in the near future.
No, I'm glad you brought that up because, again, that's another dimension upon which Cassandra's nonprofit prediction market research stands in sharp contrast to the for-profit exchanges. It's the fact that there's no business incentive to narrow down the participation on an exchange. Because on some level, the profit opportunity, it's a poker. That's the way I explain it to people. It's a poker. You're only going to make money to the extent to which there is a fish at the table. But if instead you're really optimizing for the forecasting, which is what we do at Cassandra, then you get into interesting questions about, can a prediction market become a forecasting game that functions as a reinforcement learning environment for the agents to get better at what is one of the most crucial tasks that humanity has, which is forecasting the future. I want to give an example and get your reaction to it. I want to talk a little bit about the Biden dropout markets.
Yeah.
Because I do think that illustrates a little bit of the value of prediction markets on an informational level, even if there's a clear bias. The speed at which prediction markets rapidly updated the Biden dropping out odds versus the way traditional media updated after following the debate. The prices started to move in the middle of the debate, whereas the media took several weeks before there was a shift. And so that's the example I want to get your take on it. Can prediction markets, because of the financial, the skin in the game element, force people to confront a new reality in the way that our traditional media structures don't?
Yeah. So there's a lot of things going on there. Number one, the corporate media is shit, just absolutely terrible. And basically, when you look at how corporate media handles data and handles informing people in this current environment, but also just as it's in different iterations over time, it's quite concerning. And if you look at the Biden dropping out situation per se, this was a hobby horse of corporate media. This was obviously nothing that the New York Times did in 2024 in the first half was more important to them. 300 plus articles on their landing page over the course of 6 months, essentially attacking Biden as being too old and he should drop out. And then at the same time, they focused in heavily on their very slow moving polling structures to back up the demand for this. Nate Cohen would drag out polling that was weeks old or even months old to say people are really concerned about Biden's age. This is very bad, et cetera. Prediction markets, no doubt, were much faster in understanding and translating the probability that this is going to happen, and reflecting that in your real time is obviously quite useful. And obviously, for many other things, prediction markets stand in sharp contrast to essentially the horse race coverage, which is going to continuously try to make everything as close as possible, to add drama and to show continuous movement in a way that the prediction markets are less likely to do so, because this is what they're doing. They're treating essentially politics as a game, and they want to show drama in there. Prediction markets, as well as other aggregating tools, can lead to a better understanding for both the general population and elites where the US population is or the world population are on many key events, key policies, et cetera. But this all goes to prediction markets being one of many ways in which data can be driving coverage, but does not drive coverage. And so as we look at things moving in through the Trump era this year, basically you have many big events happening. You have the coverage basically assuming that the country is very divided, when in fact there aren't great divides on a lot of these questions. ICE is extremely unpopular, and the movements they're doing as immigrants are very unpopular. That's just the fact. But generally speaking, you have a narrative that this is a close call, everything both sides. And yeah, prediction markets are something that can cut through that general tone of coverage, which is so important to the corporate media. Yeah.
Yeah. Do you think that we're going to see a version of CNBC for prediction markets?
I know that Kalshi and Polymarket have attempted to create automatic news systems around their markets, but I'm not sure how well it's going to catch on, because I'm not sure how well they're leading into daily active questions that are important. Again, what finance and sports offer is outcomes on a daily basis that people care about. And a lot of the most important prediction markets are around things that are pretty slow moving and longer range. That there's potential to have dynamically updating forecasts for things we care about. And as I said, that those would probably move past just prediction markets into a much more hybrid structure that could make something that is answering the questions people care about on a regular basis and really make something that people trust and is dynamic and useful. I see a question. I'll note here that in 2020, we tried to do a real-time tracker of predictions coming out of mainstream media over COVID outcomes. And so the idea was that we tried to dig into what people were saying and could we translate those into verifiable outcomes. And what we found is that it was actually just like super hard. Number one, because LLMs weren't there yet. So we were using more simple models, and the machine learning models just weren't pulling things as effectively. But mainly also is the mainstream media talks a lot of stuff that isn't written or stated in a way that is verifiable, that is testable. And going back to the earlier thing I was saying before, it's
That's
really
crucial.
hard.
That's crucial. The verifiability and the testing. It's crucial.
And it's very hard to write questions that are verifiable and things. So they were talking a lot about testing numbers and COVID numbers and blah, 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 but they're doing so in a way that you're just like, what are they really saying? Can I translate that into, so it's something, number one, from an academic perspective, that is something that can be done more now. We could pull transcripts and try to do them more, but it's just not the way pundits are trained to talk. And it's a really great question. And I would love to see, again, I'd love to see forecasts, whether or not they're created by Polymarket and Kalshi, or whether or not they're created coming out of Cassandra or artificially constructed utilizing LMs that could be tested and seen and help drive media coverage and drive people's understanding of the world. But there's a lot to do till we get there. So I do think that those are really reasonable questions, how we're going to see forecasts moving forward with LMs and how we can see coverage, whether or not that's driven by these markets or driven by other hybrid structures, because I do think that there would be an appetite for those types of things. And there's a lot of green space for it, a lot of impact to be had on companies, impact to be had on, and I want to emphasize this term to really emphasize there's things not just for the general population to understand, but for elite decision makers. And so you got to think a lot about who the target is and the market intelligence and a lot of stuff that Kalshi and Polymarket could be doing. But is this about informing democratic leaders with a little d or a big D, depending on how you're thinking about it, to make decisions and allocating resources, companies to allocate resources and think through, so elite impact or general population impact. There's a lot of green space out there, but there's a lot of innovation that's yet to be done to fill it out.
David, I want to thank you again for coming to speak today, helping us confront the very real criticisms of prediction markets in their current state, because this is the kind of accountability we need as a community, as an ecosystem, to actually materialize the vision of prediction markets that we have inherited from some of the top minds of the 20th century. Prediction markets as crowdsourcing mechanisms, as forecasting machines, as opposed to purely financial exchanges. So I just really want to thank you for really helping us confront these questions and grounding our vision into something that has public utility. Thank you so much, David. Have a great day.